Kristin Olsen is Goldman's head of alternatives for wealth. She joins us here now. It's so nice to see you.
Thanks for having me, Scott.
You said this is your first time here, which speaks to me, I guess, a lot about where Goldman sees the whole alts thing going, right?
Yes. I mean, look, we've been investing in alternatives for a very long time, 3 decades. We have over $540 billion in alternative assets, so we're one of the largest managers of alternatives. And we're really focused now on how we can help wealth clients access alternative investments. And so you couldn't have had an event like this 4 or 5 years ago because you actually just didn't have the types of alternative investment products that were fit for individual investors.
You guys made an announcement yesterday that just plays right into this whole story with industry ventures. It's basically you want to give clients access to the innovation economy, and a lot of that exists in the private market.
Yeah, look, I mean, if you look at opportunities today, you have most of the economy, over 85% of large companies are private. And so if you want to access that part of the economy, you need to be invested in the private markets.
The way I led into this segment is interesting to me. What you found in this survey, what you call the new alts generation, the fact that younger investors have an appetite for this, they have a greater familiarity than their older counterparts. 96% of younger investors in your survey are familiar with alts, and they also want a greater allocation. Why?
Yeah, so I found that surprising. Look, I think part of that is they've grown up in this tech revolution, and they've seen the tremendous wealth creation that's happened in the tech space. And they recognize that a lot of that is in private hands, and so they need to be more familiar with alternatives to access that type of opportunity. But I think when you step back and you think about the survey that we commissioned, we looked at 1,000 individual investors and how they're thinking about investing in alternatives. And what we found is their participation in alts increases with their net worth, which isn't surprising.
Oh, the more money you have, the more money you want to put towards alts.
Exactly. But what I did think was interesting was if you look at the $1 to $5 million segment, 39% of those investors were allocating to alternatives. That's a pretty high percentage for that $1 to $5 million range, where they really haven't had a lot of opportunity to invest in alts in the past. But I think the important piece that came out of it, though, is education. So we talk about millennials and them being interested in it, but more broadly, how do we educate around the role of alternatives in portfolio? And frankly, that's part of the reason for an event like this today is really education about alternatives. And I think I saw some of the stats about the attendees here. Only 38% of the advisors here had actually invested in alternatives before. And we looked at our survey, 80% of those investors had an advisor, but only 40% of those advisors had spoken to them about alternatives.
Wow. Well, I mean, obviously that's changing with events like this, where you're able to have advisors make a direct connection with the asset managers in a place like Case, which is aiming to connect the two. I thought it was also interesting that over half of investors in this survey label alts as, quote, high risk. What do you make of that?
Yeah, I think it was 56% of investors labeled them as high risk, second only to cryptocurrency. I think part of that is the lack of education, lack of familiarity. Because also, if you look at the data, the investors that we surveyed who had participated in alts generally found them less risky. Only 39% of them labeled that as high risk. So I think there's the familiarity that they need to have. There's education. And then when you look at the $10 million plus segment, they have 15% in alternatives according to the survey. So they're using alternatives, and a lot of the reason they're using it is for portfolio diversification. So they actually understand that by adding alternatives into a portfolio, they actually might be reducing their overall portfolio risk. So I think there's a big perception gap and an education gap that'll help bridge that perception of risk in alternatives.
But there are higher risks in certain respects. As I said with Matt Brown a short time ago, highly illiquid markets, they're certainly much more opaque. I was asking all of my guests a year ago at this very conference, is private credit in a bubble, for example? Now the question is, well, are we seeing the first cracks starting to show up if there is an issue that many investors just may not be aware of? How do you try and educate people about that? The illiquidity, the opacity, some of the issues that you might not even realize that you have exposure to.
Yeah, I mean, look, it all goes back to education. We're investing very heavily in that. We've launched our Goldman Sachs Investment University. We're resourcing it to spend a lot of time with advisors on education. The risks are different in the private markets than they are in the public markets. And you referenced a lot of them, but illiquidity, right? Some people are calling these products semi-liquid. We try to stay away from that. We don't want to mention the word liquid because even though there is a modicum of liquidity, it might not be there when you need it most.
So you're staying clear of that.
Try not to call it semi-liquid. Evergreen, open-ended, but we just don't want people to associate these investment products with liquidity.